Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, the Dividend Diplomats. Lanny, this was a pretty exciting week, wasn't it?
It was a wild week for dividend investors. Why? Because dividend increases, baby. Your income was going up while market values were kind of going down a little bit during the week.
It was the right combo. It was very nice to see. And you know what? It's been a long time since we've put together a video showing all the dividend increases from the previous week. That's how many there were this week, and that's how excited we are to share them with you. But Lanny, what do we need to do before we get into the video?
We need to smash that subscribe button, give Bert and Lanny a nice thumbs up, turn it blue. It's so easy and it helps us a ton because we want to keep producing videos for you, bringing you the best and latest content in the dividend investing world, whether that's dividend increases, dividend stocks to buy, just thoughts and analysis on dividend investing. If you're an investing for beginner, we are here for you.
Exactly. So this video is going to feature 7 dividend increases, 2 dividend aristocrats, and 5 other great dividend growth stocks on this list. We are pumped up, but everybody, we kind of need to get in here, get into the list, start going now because it's a lot of them. We want to give each stock the time to talk to. We don't want this video to last an hour because it easily could, right, Lanny?
You want to hear Bert talk for an hour?
No, I don't even want to hear myself talk. My wife surely doesn't.
It's not good.
So,
Guys,
and Lanny and you guys definitely don't either. So,
grab your children, hide an hour of Bert.
Yeah, so Lanny, first stock here. What is the one thing I love more than anything else?
Talking about good old the state of Ohio, the Buckeye State, not only just the Buckeye State, but the land, Cleveland, baby. And this is Cleveland's hometown community bank, which is actually one of the top 20 banks now.
I don't know how much of a community bank this one is, because yeah, it's grown from its humble Cleveland roots to, yeah, to your point, a top 20 bank. That bank, everybody, Key Corp, ticker symbol KEY. Love when that happens. Love when the ticker matches the name.
And their motto, you got to use the red key. And this could be very perfect because you could use the red key for your dividend investing journey, baby.
That's right. So what did Key Corp do? They announced a very solid 5.4% increase. They increased that dividend from 18.5 to 19.5.
A nice 1 cent increase, almost 5.5%. You know, again, as you remember, the big banks passed a lot of their stress tests during the global pandemic because of the coronavirus. The Fed gave them a big thumbs up. You can buy back your stock, you can increase your dividend, and you could pay the dividend diplomats in higher dividends as well.
Yeah, banks are flushed with cash right now, and a lot of them are starting to return that cash to shareholders. This will be the only bank on our list, but in the comment section, we know there were other banks that announced increases, so if you received an increase from a bank, please let us know below. We want to hear it.
So that was the first dividend stock. Obviously, KeyBank has been increasing their dividend for quite a few years. You know, they have an over 3% dividend yield, therefore a pretty good combination with dividend growth plus dividend yield. And that stock price has shot up quite a bit over the last 52 weeks. Obviously, what stock really hasn't? But again, nice job. Congratulations to the Key shareholders. Diving into dividend stock number 2, we're going to go to the babies. We're going to go to the youth, the young ones. This is going to be a curveball here, kind of one of the more kind of retailers, almost similar to VF Corp, similar to just, you know, a brand. And we're going to go down Carter's, ticker symbol CRI.
Carter's clothes are everywhere, especially for someone that has a toddler here. You see Carter's everywhere. Every time you go to Target, every time someone gets you a gift, it's usually some set of Carter's clothes. Those nice 3-packs of shirts, pajamas, whatever it is. So it's great to see that they're performing so well and that they're announcing yet another dividend increase here. They announced a huge dividend increase, Lanny. That's absolutely right. They crushed it. It was a 50% increase from 40 cents to 60 cents. Again, 50%, 40 cents to 60 cents. I had to reiterate that twice because that is such a large dividend increase.
You know, Carter's was one of those companies that during the pandemic had actually cut and stopped their dividend from 60 cents to nothing. And then earlier this year, they said, hey, we're coming back. Everything's looking better. They came back with a 40-cent dividend.
Yep.
Paid that for 2 quarters. But then Carter said, hey, we're back to pre-pandemic levels. Here's your 60 cents per share per quarter going forward. Yeah. And hopefully we'll start seeing dividend increases as well.
Yeah, what's nice too is not that the pre-pandemic level, they're at 2.25 yield right now, so that's fantastic. Then you add in there that obviously you're not going to keep having 50% increases, but hopefully they're going to keep going with a double-digit percent, so you get a nice dividend growth factor right there.
Exactly. So that was the second dividend increase from Carter's, 50%. A little bit better than Key's 5%. So from 5 to 50%. Bert, do we stay in the double digits on this third dividend growth stock?
And we stay in retail clothing.
Oh, talk to us about this.
Nike, ticker symbol NKE. It was one of the featured companies in one of our recent videos where we discussed the anticipated upcoming dividend increases for the month of November. And man, oh man, did Nike deliver.
Nike delivered. We said, Nike, will you give us a dividend increase? And they said, we're Nike. Just do it.
Do it. No, that's not what that's not this segment. It's just do it. But it was huge. It was a nice increase from 27.5 cents to 30.5 cents. 3 cents. I'm pretty sure we called that in the video. Or we said 2.5 or 3 cents.
I think we said it's going to be at least 10%.
Yeah, we were on the money with this one because, yeah, it was a 10.9% increase in their dividend. Fantastic.
Now, Nike's one of those low yielding but high dividend growth stocks. This is a perfect combination if you want to own Nike stock, or if you're thinking that Nike's a stock to buy and hold for life, because they have that below 1% yield but above 10% dividend growth rate. So again, lower payout ratio, firing on all cylinders right now. The secondary market for Nike is so hot. I mean, the amount of revenue that is being purchased as soon as new shoes come out, and then they hit that secondary market. So a lot of side hustles happen with Nike shoes. I mean, it's just a very well-known brand, iconic for sure.
Yeah, the way you said it made me think of Zoolander. When it was so hot, Han Solo.
Nike, so hot right now, Nike.
Yeah, so what we're going to do for the third dividend stock here, we're going to pack up the Nikes in a duffel bag. We're going to pack up some of the Carter's clothes for your kids, and we're going to go stay in a hotel here, because that's the sector we're heading into here. Yeah, this one is roaring back right now. This dividend stock we're going to talk about is Wyndham Resorts, ticker symbol WH. Yeah, you aren't kidding that they are back, because at the onset of the pandemic, they cut their quarterly dividend from 32 cents to 8 cents. Then in February, they increased it to 16 cents. August, they increased it to 24 cents. November, they took it from 24 cents to 32 cents right there. Huge.
Let me tell you something, brother. That's called bringing their dividend back to the pre-pandemic levels.
Yeah, so this 33% increase alone in the quarter doesn't factor in that they have risen it significantly during the year.
They are back to pre-pandemic levels. Started at 32 cents before the pandemic. Just like Carter's, they're back at their pre-dividend level.
Yeah, I think we're going to see a lot of that from the travel sectors. Airlines, I don't think are going to be announcing any dividend increases anytime soon, but the resorts and other companies that work through travel are going to be benefiting from this. So congrats if anyone owns Wyndham. That's fantastic.
And you know that hotel prices are so high right now as well. I know it's hard to even book a hotel room. Think about this. Obviously, the cleaning aspect to the hotel should be higher, but I think they also are reducing a lot of costs when you think about food, little gatherings at the hotel at night. I know quite a few individuals at work who travel, and it's quite different nowadays going into a hotel.
Yeah, they're stuck with shortages of staff, which make it so you have to become lean and you have to become efficient and trim the fat from the operational standpoint. We're moving in now, Annie, to what we would probably say is the featured dividend increase.
Who's ready?
From this
you ready
video,
for this
right?
one? I don't know if you can handle it. You can't handle the truth.
Yeah, they can handle the truth. What's this one? Aflac. Aflac. The duck is back. Aflac, ticker symbol AFL. Lynn, just tell us what it was.
Aflac said, hey, I know you guys have all been waiting for our dividend increase. We thought it was going to come at the early part of the year. And they're like, all right, maybe it'll come at the end of the year. And yes, Santa came early. Christmas came early. 21% dividend increase from Aflac. 33 cents to 40 cents. 33 cents to 40 cents.
21%. Their yield is awesome too at 2.78% right now after that increase. So
what a great high dividend growth, dividend aristocrat stock.
And it's funny too, is I just kind of took a look back on our blog. We'll put a link to the article there about my 5 always buy stocks. I looked it back 6 years later. There are 2 of them I wanted to replace from there, so check the article out. But in my conclusion, I talked about replacing them, and the number 1 stock contender for replacing them on that list was Aflac, and this is why. They are just crushing it from a dividend growth standpoint.
It wasn't Tesla?
No, it was not Tesla. unless we see those future dividends rolling out. Maybe they'll be featured in next week's dividend increase video.
Probably not.
But maybe.
But Aflac shareholders, you got a 21% jump to your dividend income. I know it was a huge pack to my forward income, and I'm sure it was for you as well.
Yeah, it was huge. So heck yeah, that's why it's the featured one. 6 and 7 are going to be great too, but number 5 on this list, Aflac, 21%. I can't believe it.
And that's why you buy dividend stocks that continue to increase their dividend year after year after year. Buy stock right now. If you haven't started yet, if you're a beginner investor and you don't know what to do, outside of looking at easy ETFs, look at the Dividend Aristocrat list. That's what Aflac is, and they continue to just perform very well.
Excellent advice, Lanny. We'll put a link to our playlist up here for our Investing for Beginners, where we did a bunch of videos early on that help people that want to learn about dividend investing do it. But now, stock number 6. This was a noisy stock this week, which is shocking because Realty Income is usually a steady, reliable company.
Realty Income.
Yeah, I spoiled the name. I got so excited talking about that noise. Yeah.
Spoiler alert.
Realty Income 0. So, okay. They announced the dividend increase, which was pretty large for Realty Income standards. They increased that monthly dividend from 0.236 to 0.246, a 4.2% increase.
Yeah, and I think the headlines kept saying 5+% increase. It's a 4% increase.
Yeah, I don't know how you round that up to 5%.
Yeah, I don't know what math they're using. Somebody let us know in the comments what they're doing. I don't know if they're trying to compare it to like this time last year or something like that, but you know, again.
Oh, that is what they do. They always do that in the press release because they keep doing those micro increases throughout the year. So probably factoring in those increases.
You've got about a 5% increase so far this year with Realty Income.
Yeah, but this specific increase is 4.2%. So change your headlines, everybody. It's not right.
Yeah, and Realty Income just did the spinoff because they acquired Verit, Bert's favorite stock from a long time ago.
Found a way back into my portfolio.
It is.
It just won't go away.
So you just got new shares, plus you got a dividend increase. They're a dividend aristocrat as well. So Realty Income is not going anywhere. It's a great real estate investment trust or a REIT to own in your dividend stock portfolio. In fact, I just talked about Aflac as a great stock for your portfolio if you're an investor for beginner. But again, if you're beginning investing, Realty Income is also a great dividend stock that pays you monthly. So definitely a good stock to buy to add to your dividend stock portfolio.
Last but not least.
This is crazy here.
Yeah, I when Lanny finalized this list, I had to double take and be like, they did it again?
They did it again.
I have nothing more to say because it just
playing
keeps...
Britney Spears' Oops, I Did It Again when he was watching this.
I did not, but... I did not. I see what you're doing over there, Lanny. This company, Lazy Boy, ticker symbol LZB. My goodness. Yeah, so they cut their dividend in the pandemic as well. This is now their third increase here. This last increase was 15 cents to 16.5 cents, or a 10% increase. Or by Realty Income's press release standards, it would be a 15% increase.
Yeah, Lazy Boy, to bring it back full circle, they also kind of cut down their dividend during the pandemic. They were at 14 cents entering 2020. They reduced it down to 7. Actually, they reduced it down to nothing. Came back with 7 cents during the third quarter of 2020. Went from 7 to 14, the pre-pandemic levels. And then they increased it to 15 cents above the pre-pandemic levels. And then they've just increased it again to 16.5 cents from 15 cents. Lazy Boy. Out of all companies, Lazy Boy.
Yeah, I was kind of shocked by that one too. I keep being shocked by this company. It's great though.
1.76% yield of Lazy Boy. I don't know. If you own Lazy Boy stock, let us know in the comments. And let us know why. Is it because you own a Lazy Boy at home, or because you just want to be lazy with investing and buy Lazy Boy stock?
And if you're watching this on a Lazy Boy, let us know too.
Yeah, interesting.
So to summarize this, 7 increases. I'm going to rip through them here. Key Corp, 5.4%. Carter's, 50% back to pre-pandemic level. Nike, 10.9%. Wyndham Resorts, 33% back to pre-pandemic level. Aflac, amazing, 21%. Realty Income, 4.2%. Don't let those headlines mislead you. And Lazy Boy, this last dividend increase of theirs was 10%, and they are crushing it, and they're way past their pre-pandemic level.
That was 7 dividend growth stocks that just increased their dividend, hopefully increased your passive income. So Bert, out of this list of 7 dividend stocks, how many stocks do you own?
2. Aflac and Realty.
2.
What about you?
We've got Key, Aflac, and Realty. So we got 3 out of 7 here.
Nice, that's huge.
Yeah, 3 out of 7, not bad. Definitely added a lot of income to the portfolio this week without doing anything. again, the benefit of dividend stock investing, you own these stocks and your income went up without you doing anything. That's called a growing passive income stream. What are you doing?
Yeah. So let us know in the comment section what dividend increases you may have received that weren't featured in this video. And if you haven't already, subscribe to our channel. Give us a thumbs up. Everybody, thank you. Let's keep growing that passive income.
That was Bert the Hurt, and this was Lanny from the Dividend Diplomats.
Over and out.